What if the real institutional blockchain of 2025 is not Ethereum or Solana? What if it is Avalanche quietly becoming the rails for tokenized real-world assets and even Visa settlement? And yet, most investors still are not watching. But this is where it gets interesting. In 2025, crypto is no longer driven by hype. It is about infrastructure. Institutional adoption is the dominant narrative. Monetary policy uncertainty fuels volatility. And regulators are drawing clearer lines traditional finance can finally step inside. Bitcoin spot ETFs are live in the United States, while Europe offers crypto exchange-traded products and notes rather than UCITS-compliant ETFs. Ethereum ETFs are listed in US brokerages, while some platforms offer separate staking services. ETF staking itself is not permitted, but Ethereum staking is still available through other channels. Capital is rotating away from speculation toward platforms with real utility. Avalanche was built for this moment. Launched in 2020, Avalanche made a bold promise scale without compromise. Its Avalanche consensus combined classical speed with Nakamoto-level security. The result was sub-second finality and thousands of transactions per second. But here is the twist. It was not built for meme coins or hype cycles. It was built for infrastructure. Avalanche runs on 3 chains. The X chain for asset creation, the C chain for smart contracts, and the P chain for validator coordination and subnets. This modular design is not just a technical gimmick. It is the foundation of Avalanche's biggest weapon, subnets. Subnets are customizable blockchains. Institutions can launch their own with custom compliance rules, privacy, throughput, and governance. Unlike Ethereum, which forces applications to share the same base layer, Avalanche lets every institution run its own chain while still interoperating. This is why, in July 2025, Visa added Avalanche to its stablecoin settlement platform. Deutsche Börse Group, through its crypto finance arm, offers AVAX custody to regulated institutions. And Skybridge Capital is tokenizing $300 million in hedge fund strategies on Avalanche with Tokeny and Apex Group. Wyoming State Stablecoin, FRNT, also launched in August 2025 and is deployed across multiple blockchains, including Avalanche. This is no longer speculation, it is infrastructure. But there is one upgrade the market is still sleeping on. In 2025, AvaCloud introduced the ERC token standard encrypted ERCs. These allow institutions to create privacy-preserving assets that are still auditable by regulators. In plain English, you can now issue compliant tokens without making sensitive financial data public. This is regulatory alignment, not wishful thinking. And there is more. Async execution is planned to roll out in 2025 to increase parallelism and throughput. Third-party reports suggest a sizable uplift in performance for tokenizing real-world assets at scale. That is not a luxury, it is a requirement. Smart money is already moving. Crypto Finance AG, Deutsche Börse's crypto arm, now supports AVAX custody. Skybridge Capital is tokenizing hedge fund strategies on Avalanche. The state of Wyoming's FRNT stablecoin is live and using Avalanche alongside other chains. Visa has expanded its stablecoin settlement platform to Avalanche. And venture capital is flowing into subnet builders across DeFi, gaming, and tokenized securities. Again, this is not hype. This is execution. But let us be real, there are risks. AVAX still has unlocked schedules and inflationary pressure. Subnet growth could fragment the ecosystem. Validator power could centralize around institutional subnets. The ERC standard still needs regulatory clarity, and that takes time. Avalanche also faces stiff competition, Ethereum's scaling ecosystem, and Solana's explosive consumer traction. The outcome is not guaranteed. But the bull case, it is big. Avalanche could become the default blockchain for institutional tokenization. Subnets hosting tokenized assets, state-backed currencies, and even national infrastructure. It is already showing signs Visa, Deutsche Börse, Skybridge, Wyoming. This is not retail. This is macro-aligned infrastructure. Now here is the twist. The Etna upgrade is already live, optimizing consensus and interoperability. Async execution is rolling out in 2025. Encrypted tokens are live through ERC. Avalanche interchain messaging connects subnets with native communication. And the Avalanche Foundation's Retronine 1000, a $40 million grant program, is rewarding builders and referrers across the ecosystem. These are not future promises. They are active systems scaling now. Community and governance are also evolving. Staking remains robust. Validator decentralization is healthy, but subnet dominance by institutions could change that. Avalanche DAOs are active. Treasury proposals are voted on. Capital is being allocated to real builders. And perhaps most importantly, the culture around Avalanche is evolving. Crypto-native builders are now working alongside institutions. That tension will define Avalanche's future. So here is the bottom line. Avalanche in 2025 is no longer a bet on hype. It is a bet on infrastructure and regulation-aware execution. It is not trying to be the cheapest. It is not trying to be the fastest. It is trying to be the most adaptable. Customizable subnets, encrypted token standards, institutional partnerships, Visa settlement, state stablecoins, hedge fund tokenization. This is real utility, and it is happening now. For long-term, macro-aware investors, this is an asymmetric setup. If Avalanche succeeds, AVAX could become the backbone of tokenized capital markets. If it fails, it may fade into the noise of niche layer ones. But the upside is strategic. Because utility is always undervalued until it is not. And Avalanche might just be the overlooked infrastructure of this cycle. If you value deep research like this, subscribe to Crypto Wayfarer. Stay sharp, stay strategic, and keep wayfaring.